Advantages of using the multi-time frame approach. In using the multi-time frame approach, it gives you a broader technical view on what is happening on a pair. Now, there's a temptation for day traders to stay on the lower time frame. The problem with this is that as a day trader, if you are not one that looks at the monthly and the weekly time frame, that's the higher time frames, you will not know exactly where the price is heading in the long term. And the problem with that is that these big banks, the market makers, they trade on the higher time frames. If you want to understand the flow, the direction in which the market makers are going, then you need to go to the higher time frame. By going to the higher time frame, you get a general view, a broader perspective of what a pair is saying. You get the overall perspective of what a particular pair is doing. There are fewer candles to deal with, therefore it makes analysis very easy. Now, this is very explicit, is well explained. If you go to the higher time frames, you find out that you have lesser candles to deal with. For example, there are 24 1-hour candles in a daily candle. So if you want to analyze 24 candles, is it not better to go to the daily candle and find out what is happening on the daily instead of staying on the 1 hour and dealing with 24 candles? On the daily time frame, you just have to deal with one. Imagine going to the weekly and the monthly time frame. Now, if you do this, it will be easier for you to analyze the markets quicker and more accurately. Then you can come down to the lower time frame to trade or to execute your trades in the direction of the higher time frames. Now, I will also mention that fundamental changes that give rise to prolonged trend are more visible on the higher time frame than it is on the lower time frame. Now, I'm not talking about the daily news that are released during the day. I'm talking about economic data that affects the economy of a nation over a very long time. Fundamentally, if you want to see a major fundamental change in price that had happened back in time, you can only see it on the higher time frames, especially the weekly and the monthly time frames, sometimes on the daily time frame. So you stand a higher chance of staying on the side of the fundamentals when you analyze on the higher time frame. So it is easier to analyze on the higher time frame. That way you are also doing a bit of fundamental analysis. So that is that's the rationale behind analyzing on a higher time frame. Step-by-step application of multi-time frame analysis to your trading. In order to understand step-by-step application of multi-time frame analysis, I need to introduce you to the following technical tools and concepts: the trend line and the trend structure, the support and resistance zones. I'll be talking about these two concepts and technical tools in the next class. So sit back and I will see you in the next class. Thank you.